What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see the tech sector continuing to sell off and we still see red across the board. Is this bull market toast or can we continue to go higher from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw SPY going down 0.25% and we did see SPY closing back below that 20 simple moving average. Remember, last week we closed back above that 20 simple moving average, which was bullish price action, but today we see the price action drifting just a little bit lower. Now there is still bullish developments going on because the price action is still closing over two of these moving averages. We see the 13 EMA and the 5 EMA starting to turn around and go positively sloping, and we see the price action trying to break back above that 20 simple moving average. So this is going to be a very critical development for the bulls or the bears. Right now, this is going to be a very critical support level right on top of that 5 EMA. If the bears can bring the price action back below the 5 EMA, this will start looking like the market is rolling over and dying. However, if the bulls can get the price action back above this 20 simple moving average, then we'll start to see the 5 EMA crossing back above the 13 and getting back above the 20 in the very near future, and then we'll be right back into a full bull trend. So right now, this is a very critical moment for both the bears and the bulls, and we're going to know who's going to win this battle very soon. Remember, the bears need to get back below the 5 EMA and try to break back down below 412, while the bulls are battling to break back above about 416. There's still a gap above and there's two gaps below, so we're still in a market of a battle of the gaps sort of situation, where the bulls are trying to close the gap above and the bears are trying to close the gaps below. Now right now we have to remember, if we zoom out and we look at a weekly chart of the SPY, we are still in a bull trend. If you zoom out on a daily chart, you can still see higher highs and higher lows, and we did find support at a positive sloping 50 EMA. So typically speaking, in a bull market, after you get a nice pullback and a nice correction like this, it presents opportunity and it can actually bring life to a brand new bull rally. So right now, there's still a lot of energy for the bulls to continue to try to push this market higher. However, if the bulls fail to break through 416 and we see the bears able to roll this market over and getting back below 412, that will tell us that we are likely going much lower in SPY and it's time to get out and take out a lot of risk in this market. So above 412, we're going to remain bullish, and when we get back above 416 for a couple more closes, we could go full bull and see brand new all-time highs. So be patient and wait for the confirmation. And right now, if you're trading long, you know your risk is defined on a close below 412. If you're trying to short the SPY, you know that your risk is defined on a close above 416. So right now, it's a great opportunity for both traders, and we still do have quite a bit of volatility in this market. We can see that we're dead in the middle of the Bollinger Band, so there's no resistance or support in either direction there. And we're trading right near the critical 20 simple moving average. So we're going to know very soon who's going to win this battle between the bears and the bulls, but do remember that the bulls do have an advantage being in a longer term cycle of a bull trend and also bouncing off of a critical support level at the 50 EMA. So remember that the gap above will close at 417.8 and we will have resistance at 420 and 423. The critical downside support levels are going to be 414, 412, and that 50 EMA right around 407. Next up is the QQQ ETF, and we see the NASDAQ 100 going down 0.61% today and also closing right on top of the 5 EMA. Remember, with the NASDAQ 100, we're still trading below the 50 EMA, so the NASDAQ 100 and the tech sector is still looking much weaker than the rest of the indices. Right now, we need to see the tech bulls trying to retest that 50 EMA resistance level right around 328, and it will be a bullish price action close if the bulls can close back above that 50 EMA level. So the QQQs will have critical resistance at 326 and 328 and critical support right around 324 and 322. Remember, we still have a bull trend if we zoom out on the QQQs, and the last thing we did was form a higher high, and it looks like right now we're potentially forming a higher low. So even though this was a really big drawdown from the highs, that correction could be over and it could be spawning a brand new bull trend in the market that we are just now in the very early stages of. So the critical line to draw in the sand on the QQQs is going to be on 322 support level. And if we break down below this trend line, that will mean the bears are taking over and the QQQs are rolling over and dying. But as long as the QQQs are above 322, there's still hope for the bulls. And as long as they can keep the price action back above the 5 EMA, they should be able to build up a support level to retest the breakout of the 50 EMA. So just like with the SPY, we see the QQQs at a critical test. Remember, there's still a gap to fill below on the QQQs at 315, but there is a lot of support levels below that would have to break down before we get to fill that gap. Also, remember on the triple Qs, it's very likely that we did finish out an ABC correction, which does mean that the correction could be over and we're going higher from here. So keep an open mind and watch the price action very critically right now, because there's no trending for the bears or the bulls in either direction, and the price action at these critical resistance and support levels is going to tell you which side is going to win this battle between the bears and the bulls. Next up is the Dow Jones ETF, and we see the Dow Jones by far looking the strongest of the three indices. The Dow Jones closed back above the 20 simple moving average for 2 days in a row, and even better than that, it's back above all of the moving averages for 2 days in a row. So the Dow Jones is back in a full bull trend, and the price action is trading above all the moving averages. The Dow has been the strongest during these reopen and inflationary trades, so this really is no surprise, and the tech sector is really dragging down the S&P 500. So if the tech sector goes back into a bull rally, and we already see the Dow Jones doing well, it's easily possible how you could see the S&P 500 going to brand new all-time highs. So keep an open mind and look at the more macro level view in the market, and you can still see a lot of strength in a lot of the sectors, and they continue to push higher day after day. So we see that with the Dow Jones, and we also have a huge gap above that needs to fill, and that gap won't fill until we get to about 347.65. So there's about 1% upside to fill that gap above, and that will be a very critical resistance level. However, if the Dow can break out, it will still have resistance at the next price target above at 350. So critical downside support on the Dow Jones is going to be right around 341.7, and if that level does break down, that will also look like the Dow Jones is rolling over and possibly going back down to retest support at the 50 EMA. That support level is going to be right around 335, and that should be a very strong support level. So if it does break down, that would start signaling that we possibly saw an important market top. Next up is the Russell 2000, and we see the Russell 2000 positive today, going up 0.14%. The Russell 2000 closed back above the 50 EMA, which only further proves that we could be going back into a bull rally. We see the Russell 2000 starting to look bullish and starting to crack back above that 50 EMA. We would like to see some more follow through, and definitely would like to see getting back over that 20 simple moving average. So keep in mind, if the Russell 2000 can get back above 222, it will be starting to build up a full bull trend, and it could try to push up for another leg higher and possibly get to all-time highs. Now remember, if you saw my weekend video, there is the possibility that we see a major correction coming next month, so this would make sense that we see one final push towards all-time high in the indices in the remainder of the month of May before we see another significant major correction in the market. Now remember, I'm not trying to call a top, but I want you to be prepared for anything that's possible in this market, and right now it's fully possible we push higher towards all-time highs before another correction. So watch the price action closely, because the critical support on the Russell 2000 will be at 221 and a breakdown back below about 219. If we do break down back below 219, it's going to start looking like the Russell 2000 is also rolling over and dying. Next up is the ARKK ETF, which we already did see roll over and die, and it's down here testing a very critical support level right around 97. Ever since ARKK did bounce off that level, it's still trading below the 5 EMA, and it's still in a full bear trend. So right now, we just don't see any traction in the ARKK ETF, and we don't see any bullish energy across the board. We see a lot of weak price action with a very bearish trend, and it is possible we break down below the support level and go down to the 80s. So right now, the line in the sand on the ARKK ETF is at the $97 support level, and if that level does break down, you want to get out because it could be going much lower. Critical upside resistance, as you can tell, is still the 5 EMA at 103.8, and we also have critical resistance at 106 and 109. Remember that ARKK is already in a bear market, and it has not formed a higher high since February. This is not an ETF that you want to go long on until we see a reversal of the bear trend. Next up is the VIX, which is our fear indicator, and we see the VIX inching up just a little bit today, closing at 19.7. As you can tell from the chart, the VIX is still finding trouble breaking back above 20, which is our critical resistance level. Remember, the VIX over 20 means we could be going back into a deeper stock market correction, but as long as we see the VIX staying below 20, it is likely we'll see the VIX continue heading lower, and low VIX means low fear, which means more likely to go to all-time highs. So watch the VIX, because if it can't break over 20, that's going to be another indication that we could be going back in for another bull rally to a possible next leg higher. Next up is gold, which had a bullish day today, and we see gold getting very close to pushing up towards our next price target at 1876. If gold can break back above 1876, we have another price target above at 1923, and downside support levels are going to be 1850 and 1829. On silver, we finally did see a breakout of that critical resistance trend line, and we did blast right through our price target at 27.6. Remember, the critical resistance trend line was at $28, and we did get a decisive break of that level. So it would not be shocking to see silver retesting this breakout as support before it continues to go higher. The upside price target on silver is up here at $29, And as you can tell, silver is in a full bull trend and it continues to push higher. Next up is Bitcoin, which is currently down over 8%, and it did blast through two critical support levels at 48,600 and 45,000. The last critical support level is right here at 41,700, and if that level does break down, Bitcoin could be going all the way back down to $30,000. Remember, I've been talking about this possibility for a very long time now, ever since Bitcoin hit that critical all-time high. These bear markets take a long time to play out, and yes, Bitcoin is going into a bear market. As of tomorrow, we should see that 20 simple moving average crossing back below the 50 EMA, and then all of these moving averages on Bitcoin will be stacked to the bear side, and it will be a short into resistance and continuing to drive Bitcoin lower. That doesn't mean that Bitcoin can't bounce off of one of these critical resistance levels and start heading higher, but do note that the trend is downward and the price action is starting to show a breakdown in the trend, as well as a possibility of going into a bear market. So take this critical support level at 41,700 very seriously, because if this level fails and this level does not hold the price above this level, we could be going all the way back down to about $30,000 to $33,000 on Bitcoin. You will still have critical resistance on Bitcoin now at 45,000 and 48,600. On Amazon stock, we went up 1.47% today and closed back above the 50 EMA. Remember, we had critical support on Amazon right around 31.38, and that level did hold up as support, and it does look like we're starting to bounce. Remember, if Amazon can get out of this resistance trend line and start breaking out, this will be a very bullish trade, and we could see Amazon going as high as $3,800. So if Amazon goes into another bull run, just remember what that will do for the triple Qs and what it will likely do for the broad market. So if we see Amazon starting to break out of 3,300 and about 3,350, that will be a bullish indication, and it might signal a broader bull market in the stock market, so pay attention to Amazon stock very closely. Critical downside support levels are going to be 32.60, 32.09, and 31.38. Next up is Tesla stock, which went down over 2% today, and remember that Tesla is also in a very critical bear market. All the moving averages are stacked to the bear side, and the price action is still very negative below all of the moving averages. Tesla has a very critical support level at 557, and if this support level does break down, you want to get out of Tesla stock. If 557 support breaks down, it's very likely that Tesla stock is going all the way back down into the 400s. However, this is a very strong support level. So if this support level does hold up, this could also be a very great buying opportunity. Remember how risk and reward works. If you're buying off of a critical support level, your risk is defined some percent below this support level. So this could be one of the best Tesla trades for all of you Tesla bulls out there. And I know this is a cult stock and there's always going to be Tesla bulls. Eventually, one of these support levels will hold up and it will cause a critical short squeeze, and we could see Tesla going into a really nice bull rally. So watch 557 very carefully, and if that level breaks down, remember to get out of the stock because it's going much lower. You'll still have critical upside resistance at 594 and 633. Next up is Apple stock, which is currently down about 0.93%, and Apple stock did close right on top of the 5 EMA. Apple's in a really nice downward parallel channel here, and if we do see a breakout to the upside, we could be going back into a bull rally. Remember, Apple's critical resistance levels are going to be right around 128 and 128.50, which is the 50 EMA. Right now, Apple's trying to get back above the 5 EMA, but it still needs to try to break back above the 50 EMA as well as the 20 simple moving average before it can try to go back into a bull run. So right now, the critical downside support levels for Apple is going to be 126, and if that level breaks down and we break back down below 123, we could be going down to retest support at 119. So Apple is a market moving stock, and right now it's looking kind of weak. But if we see strength in Apple, that will signal that we could be going back into a bull rally as well in the triple Qs. On the financial sector, we were up today, going up 0.18% and still holding up above the 5 EMA and holding on to the very strong bull trend. The financial sector still looks very strong, which is bullish for the S&P 500. On the industrial sector, we went down 0.31% today, still over the 5 EMA and still holding on to the bull trend. The healthcare sector dropped 0.19% today, but it's still over the 5 EMA and it's still holding on to the bull trend. The healthcare sector is consolidating, so it does look like it could be getting ready for a big move. The energy sector continues to dominate, and we see energy going up over 2.3% today, and it is closing way above the 5 EMA and still in a very strong bull trend. The energy sector looks very strong, and it does look ready to continue to push higher. So going back to the S&P 500, you can still see that all of the sectors are still looking very bullish except the tech sector. So if we see strength coming back to the tech sector, expect to see new all-time highs in the S&P 500. We see the VIX struggling to break back above 20, and we continue to see hopes that a new bull run could be on the horizon. Remember, the higher we go, the more risk that's going to be in this market, and you don't want to get trapped in a major correction that could be coming next month. So if you haven't already watched my video from Sunday, make sure you watch it very closely because it is a warning sign for what could be coming. But don't just assume that we're already there, because we still have a lot of trading left to go in the month of May. Also remember, on the Stocks Channel Discord, I'm giving you critical analysis and updates to always help you stay on the right side of the market. I'm also bringing new trade ideas to you weekly to help you absolutely crush this market. If you're interested in the Stocks Channel Discord, you can find out how to join by clicking on the link in the description of the video. So remember to stay objective in this market, and remember that anything is possible, so let the price action and let the trends do all of the talking. All right, next up is going to be a final update on our trade idea, Disney stock, and we did see Disney going down over 2% today and closing below support at 170. Remember, this is a risky trade now because it could be breaking down and we could be coming all the way back down to about 160. So on Disney, we definitely see a breakdown and we definitely see a bear market forming, with all the moving averages to the bear side and the price action continuing to break down below support levels. So if you're still in this trade, you want to consider getting out on the next bounce because it could be going much lower. Right now, this is too risky to continue to hold, and it's still breaking down through support levels. There could still be dead cat bounces along the way, and don't forget that there is a gap close above at 175.7. So if you're looking to pick up Disney, try to get it around 167 or 160, but right now it's just too risky to buy because it could be continuing to head lower. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.